Whatever stage you're at with your trading, it's important to stop and gain perspective before planning your next move. Take a break from the charts and join in the discussion with our hosts, Jason Graystone and Akil Stokes, as they share insights, opinions, and expertise on all things trading. Grab a coffee, pull up a chair, and join the Trader Coffee Break.
All right, guys, welcome to another episode of the Trader Coffee Break. Thanks for joining us here. I'm Jason Graystone.
I am Akil Stokes this time.
And we've got another episode lined up for you. We're going to grab a coffee. We're just getting away from the charts for a bit. I think Akil's just finished his live trading session. I finished mine a few hours ago, because I do the London session. And it's just a great time to get away from the charts and just discuss certain topics that come up during the trading session, and obviously topics that we talk about with our traders, and for you guys to join in the conversation. That's what I really want to encourage. That's what we really started this channel for, so that we could get that conversation going and bring to the surface any kind of demons, gremlins that might hinder your trading or stop you from achieving that level of success that you want with it. So
yeah, I was going to say, Jason, I don't think people realize, they see us on the YouTube and the podcast and stuff like that, but we're actually out there having conversations on a regular basis with traders we work with, and just random traders that ask us questions on the internet. And one of the reasons we wanted to start this thing is because there's kind of so much information out there. And if one person asks it, there's another person that has the same question. So I think it's a perfect platform to kind of take the messages we're getting through email, social media, or just maybe on the chat or whatever like that, and kind of bring it to a wider audience, and hopefully help some people that way as well.
Absolutely. And I hope it is helping you guys. Let us know if you've got value from this channel. And it is just a very clear, non-confusing channel with trading discussions about different topics. So there's our goal for this channel is just to build it out until there's a topic that we haven't covered on trading. and you can find any answer that you want or any insights that you need just by searching up this channel or watching all the videos. So appreciate you all subscribing so far. Today we're going to talk a little bit about kind of realistic expectations going into trading. Not so much what we talked about before, but really more about risk, margin, leverage, how much you need to kind of trade a decent to kind of live off trading. Maybe we'll talk about that maybe. And I guess the best place to start is why most people go into trading. And I'll just say the amount of questions that I get or DMs saying, how quickly could I turn $500 into, $10,000 or $1,000, and we're essentially talking about doubling your account. And there's definitely wrong ways about going to do that. And I think people go into trading with the wrong approach because they're looking to double an account. Well, I'll let Akil kick off, because you were talking to someone today, right, about risk?
I was, yeah. We're talking about risk, some of the myths out there. I would say just, so you don't feel bad. I was one of those traders that went into trading not necessarily thinking I was going to double my account, but I started off in the stock market, just, regular investing, kind of investing / trading. I didn't really quite know what I was doing. I was really good at it, but, knowing what I know now was kind of reckless. But the reason that I was attracted to Forex, which was still rather new, this is going back to 2009-ish. So about 10 years into really kind of retail traders being able to really get after Forex, is because of everything I heard, right? I had no idea what trading currencies were, but I had a buddy of mine that said, hey, this is a market where you can start with less, you can make more in a quicker amount of time. And again, although I did really well in the stock market, I didn't have a massive amount of capital. So again, return on investment was good, but the actual monetary value, it wasn't life-changing. It wasn't anything I could live off of. So I was attracted to this idea that, wait a minute, I can take a little bit of money, I can make more money with it, and I can do it quicker. Like, why not? And I think that's what attracts a lot of people. I think the difference is you do have to be a little bit realistic and understand that, yes, all those things are true, because it is a leveraged market. But doubling your account, it's true, but you got to be careful not to fall for something that is too good to be true. And understand that whenever you put yourself in a position where you can double your account, you can make money quicker, it also means you can lose money quicker.
Yeah.
And that's something that I think a lot of traders don't realize. We think about the potential gains and the glory. We don't think about the risk that it takes to achieve those potential gains. And it really has to be a switch of mindset, in my opinion.
Yeah, absolutely. And I think you have to understand, like, leverage, as you said, it's a double-edged sword, right? So yes, you can control a larger portion of the market with a smaller amount of capital, of your capital at risk, but it works the other way as well. You know, you can also lose a lot more. And with great power comes great responsibility, as I said as Aunt May said, I think, in Spider-Man. But it's so true. It's so true. And I think, if you're thinking about, so let's move on to how people approach that then. I think they not only over leverage, but they over position size. So they're risking too much on every trade. I've had people risk 50% on a trade. And
oh no.
The first thing I want you to, I know, the first thing I want you to understand is, if you lose 50% of your account, you've then got to make back 100% of your account. And I know that's kind of obvious when you say it, but a lot of people don't really think about that. They don't think, oh right, yeah. If I lose 50, if I've got $1,000 and I lose $500, I've now got to make $500 just to get back to break even. How often do you hear of people doubling their account consistently? It's not quick. You know, it might take you 18 months, 2 years. It might take you 3 years to double your account. It's not something you can just do. So you really need to think about that and be aware of that when you're going into trading. You're not likely to double your account unless you've just hit a lucky, I'm not saying you can't do it, but if you are doubling your account, what I would say personally is you are not trading professionally, consistently. You don't really have a good money management strategy or risk management strategy. You are over leverage, over position size.
You're recklessly gambling. Recklessly gambling.
It's just gambling.
And I think we can, and we have a pretty fair amount of experience in the market. I think a more realistic and expectation is kind of how it really works in real life. Is you don't go out there and you don't double your account right away, right? It's your account grows slowly and consistently, and it compounds, and your return on investment starts to create a bigger monetary figure. And then every once in a while you get a pop. Every once in a while. So it may be 8 months of just slow, methodical trading. And then once a year,
twice a year, maybe
big pop. Yeah. And then slow and methodical. And that's not a bad thing. It's being realistic, because what you're doing is, with that slow, methodical trading, just like the great power becomes great responsibility, we're managing risk, right? It's slow and methodical, but it's going in the right direction. It's always pushing in the right direction, bigger picture. We're never, again, digging ourselves in such a deep hole that we got to put in double the effort just to get back to break even. We're kind of absorbing risk and moving on to the next equity high, then absorbing risk and moving on to the next equity high. But that goes back into the whole deeper issue, right, of kind of society in general, Jason, is that what do we all want? We all want instant gratification. What are we all trained for? The highlight reel that social media is. And we see all these, you see all these screenshots, right? Screenshots of a person that made this much, or DMs
someone that's taken like hundreds of the same trade. When it starts going in a direction, they put on 100 positions.
What's funny is, right, someone sent me a DM the other day. He was trying to convince me to some Bitcoin something, right? And like, I humor these guys because it's funny. Because first of all, it's like, you should know who I am. Come on, man, I'm Akil Stokes, Trader Coffee. But it's funny. So this guy, we're going back and forth, and this guy is telling me all this thing about, I can make you this much, I can make you that much. And at the end of the conversation, he asked for a loan. And I'm like, if you're making this much, why do you need me to loan you money? Like, what's wrong? But we get fooled by all of this stuff, because the reality, the reality isn't sexy. Like, the reality of entrepreneurship, business, and fatherhood, motherhood, right? The reality of life isn't sexy. It's a lot of hard work. And then you get these sexy moments, but then you go back to grinding, and it's a lot of hard work. And I don't know why people don't think trading is, or I don't know why people think trading is any different than that.
No. And I always say like, when it's boring and monotonous, and like, that's when you're making profits.
Yeah.
And that goes for any business. When it's boring and systematic and monotonous, that is profitable. When it's volatile and it's like, up and down, up and down, up and down, that's stressful. And that is, I don't know if I'm going to make the bills this month. And then next month, let's go to the Bahamas. And then next month, that's, you kind of want it both, but you want to build it off of that consistent, slow, steady, sustainable equity growth. And then you can have the big jumps, the big leaps, as Akil said. And in normal business, that would be like a big campaign that you run, or a big offer that you do, or a big sale that you do. And you get that quantum growth income off the back of that sustainable growth.
I was in our live room this morning, not to get too much off topic. Like my phone was blowing up this morning. Usually I don't answer my phone, but it was stuff that I had to answer because stuff was going wrong. And like, to the outside person, and you're looking at it, I'm at my phone, I'm texting people, I'm doing all this stuff. It's like, oh, that's awesome. He looks busy. Like, no, that's like, I don't want that. That's damage control.
Yeah.
That means there's a problem, right? If my phone is silent, that means everything is moving steady, right? That's the reality. Like, if someone's calling you, if you're the business owner and someone's calling you, that means there's a big enough problem where you need to be informed. And typically you don't want that.
No, it's so true. It's so true.
I was talking to a guy about risk and leverage, and we were having a conversation about, I guess he had just discovered the reality of how many positions he can have on. He was like, hey, Akil, I have a $10,000 account, just throwing a random number out there, this much margin, this much leverage, blah, blah, like that. He said, I'm risking, I think it was 2%. He said, I just realized that I can't have more than X many trades on at the same time if I'm risking this percent and want to stay within kind of my maximum risk. And I think what's interesting is that a lot of our viewers are probably listening to this. And when you hear like, hey, Jason, you risk 2% in the trade, they're probably like, oh, that's nothing, like 2%, like that's all. Like, how are you ever going to go rich risking 2%? But if you ask any professional trader out there, like I spoke to Cody this morning, who's one of our traders we worked with for a couple of years now, and he got funded. And he was, and this was his response. He said, if I risk 2% per trade and I lose 5 trades in a row, that's 10%. If I lose 10%, they take their funding back. So it's like 2% is actually a rather aggressive number to be risking on a per trade basis if you ask any professional trader out there.
It is. So that kind of leads into the final piece of the puzzle, which is the reason they're trying to risk so much is so that they can earn a lot more from trading. But in actual fact, well, what you said at the beginning, we all want instant gratification. They're trying to live from trading profits. And the famous question is, how much money do I need to trade full time? And it's such a loaded question. I know you've answered it many times on your podcast. I've answered it many times.
You did a great video on that too. I forgot when.
I did. Yeah. We get this asked. It's probably the most commmen question, right? Or one of.
Mm-hmm. Other than what's your strategy? That's
other than what's your strategy. Yeah. Other than that. But obviously it's a loaded question, and it's bespoke to your living costs, what system you're trading, how frequently you're trading, the time frames you're trading, when you're taking withdrawals, all that kind of stuff is going to be dependent on you. But the most important thing is your performance. Like I can't possibly, it's a bit like when you go into a car dealership and you say, look, I want you to guarantee me that this car will do a certain amount of miles to the gallon. They'll go, no way. Like, I'm not guaranteeing any of that, because it's all dependent on how you drive the bloody car, right? How you go around corners, how you drive like a lunatic, and when you don't change gear on the right, it's very dependent on you. If you come to me and say, how much do I need to trade full time? It's a ridiculous question for me to answer, but there are some guidelines and some principles that you can abide by to kind of map out what that looks like for you. And that's what I'd rather do. And I have done a video. I'll ping a link to the video here, and I'll ping a link to the video, one of Akil's earlier podcasts on this subject, which was really, really good podcast. But the thing is this, right? If you're making 2%, 3%, 4%, whatever it might be per month, let's just say you're compounding out to between 35, 30, 40, 50% per year, compounded out. That means not taking any profits. Well, then what does that equate to based on a certain figure of your account? And once you know that, then you've got to think, well, I need to leave some money in there as well, right? So you don't want to take all the profits. So you've got to figure out what you need to leave in there for it to continue to grow, what you can then take the rest of the profit and divide up between the year so that you can evenly distribute that per month, because you don't want to be taking, when you have a good month, you don't take the good month. And then when the bad months come and you've like now the good month's running out and you've got nothing to take, you have to think longer term. You have to think over averages. So, I mean, I don't know about you, Akil. What do you tell people that ask this question?
Same thing. I don't know. I mean, there's so many moving pieces, like you said, but I think the main thing is people, they don't do that second part of the calculation that you mentioned. Everyone, I think people, once they get it, they do understand where it's like, okay, if I can make this much a month, this is what it equates to, and this is how much my expenses cost, and I can cover that. But the most important part is the compounding factor, right? If you take out all your profits, you're doing nothing but running on a treadmill. You're doing a lot of work, you're sweating, you're breathing heavy, you're getting fatigued, but you're not going anywhere. And eventually you're going to go backwards, because there are going to be those drawdown months. And every time your month takes a drawdown, so you take a period of losses, right? Your account's going to get smaller. Now, all of a sudden that return on investment is smaller, and it's like a death by 1,000 cuts, like a slow bleed out.
That's it.
So you need to take into effect, how much do you want to remain in your account, with, being able to take whatever you need to take out for profits. And this is why we always advise, like it's this. So here's one of the stupidest things I ever heard, right? And I'm sure you got this a lot. If you're a good trader, how come you teach? How come you have another business? Basically, how come you have sources of income from different places?
Yeah.
And that's the stupidest thing I've ever heard in my life, because if you look at anyone that is successful, it is multiple income streams, multiple forms of revenue, because they produce you more, they hedge each other. But in trading specifically, let's say you are a trader and you're a skilled trader, you're really good, but you have $20,000 to play with, right? You're not going to be able to live off $20,000. But let's say you start a signal service, right? Where you say, hey, I'm going to put my signals out there, a trade copy service. I'm going to charge people a $50 a month subscription fee, right? Now you're starting to grow a business. And what that business allows you to do is it allows you to produce more income that you can keep for yourself to help pay the bills, which means you have to take less out of your actual trading profits, which means you can keep more in the account, which means it can grow faster and all of that fun stuff. So you're going to hear out there people shaming you or getting a bad rep, but it's just being a smart business person, because the ultimate goal is to build that account. Like the ultimate goal is to keep as much as you can in that account so it can grow, so your money can work for you without
and use your skill as a trader to grow the account.
Yes, right? yeah. But people overlook that.
Yeah, totally. And obviously you have to actually be consistently profitable if you're going to do that, because if you don't get any results, people are going to be like, well, this is not working. And you're going to have a big churn of clients, which is not what you want. But you need to look at trading initially as a tool of acceleration of any money that comes into the account. And if you can use that skill to accelerate returns on any amount of cash that goes into that account, what you get is this sense of belief where you just think, I want to find as much money as possible to chuck into this thing. Because it's like having a slot machine that you put £1 in or $1 in and you get a few dollars out. It's like, right, if you had the confidence in that slot machine, would you be able to go and find capital? Yes, you would have more confidence. You'd be like, right, release some equity on the house, go and sell this crap that we don't need. I want to fund this account with as much money as possible. And a great way to do that is to go and serve people in some way, in some kind of business dynamic. That's where your income is really going to accelerate, and you're going to put it into the account. You're still going to be trading because you're doing trading, education or signal service or whatever it might be. And then you're getting the money whilst you're trading and you're growing your account. So it's win-win. And then you'll get to a point where you can decide whether you just want to trade full time or chances are you probably will want to continue to help people in some way. I don't know any trader that doesn't have some kind of altruistic or giving side to a business. Whether it's a charity, or they build a school, or they go and give to their community, or they help other people, or they work in a team. If you don't have it, it's very difficult to make money consistently. Just take. That's not how we're built.
So any good trader,
any good
reckless,
trader,
not reckless gambler.
Yeah.
But I agree. I think what you realize when you're, again, I don't really think you can do anything, and I guess you can, but I think it's like you said, it's very hard to be very selfish and be successful. I think, I mean, selfish to a fact where like you don't want to do something that helps others, and I'm sure there are people out there, but I think what a lot of traders realize is that once you kind of unlock this skill, it's kind of like a superpower, and then your goal is like, well, how can I share this? Because it's not a genetic lottery. It's not like the NBA or in the EPL. You don't have to be a certain size or fast. It's the skill that anyone can do. And it's kind of like, it ends up being the secret where it's like, hey, like, come on, you can do this too. And you can inspire and empower other people. I had something else I wanted to say too, but I forgot what it was. Okay. It was about the account growth, I think. And this is a whole different topic that you've covered a lot of times, but I think making money is the easy in general, not trading, but in life. I think making money is the easiest thing you can do. And I offend a lot of people when I say that. But you can always pick up a job somewhere. It may not be a job that you favor. Again, I cleaned toilets. I'm sure you did all types of stuff you didn't like doing. But if you want to make money, and the goal is, how can I make extra money on the side so that I can dump it into this account so that I can make this account grow quicker, there's always a way to do it. And I think especially as a newer trader starting off, if your ultimate goal is, hey, I want to live off my trading, if you have your number, I need to reach this amount in my account size to kind of be in a position to do so. And assuming you're already skilled, you're good to go, you're just missing the capital, that's the only thing. Do all the things that Jason mentioned, right? There's always, you can pick up another job. You can, kind of, go through your whole, your personal financial spreadsheet and seeing where you can cut costs. What can you sell? Can you take out loans on the house, right? If you trust yourself with that skill, the only answer is, well, how can I put more into this account? Which is basically, how can I have more money? And again, I think making money is the easiest thing you can do. I just think people are selfish with what they want to do. But that's the skill is the hard part. The money is the easy part.
Yeah, I agree. I agree 100%. And making money is easy if you can just get out of your own way and stop making excuses and being too proud of what you want to what you want to be seen to be doing, because it doesn't look right on your Instagram bio. Okay, there's a lot of money to be made, and there's a lot of people willing to pay. So amazing. That's probably going to upset a lot of people. And Akil said, look, anyone can trade. And yes, there are different personalities. If you didn't watch last week, you can go and watch that video right here, where you can go and check out your personality type to see where you fit in the whole spectrum of trading personalities. But look, we're going to wrap that up there, because we've covered a lot of ground. I wanted to it was more about the approach, this kind of rapid buck approach. And it's normally down to, what should I risk? What leverage can I use? Margin, and how quickly can I trade full time? So we just wanted to cover that as a macro topic on this one. And maybe we'll delve deeper into one of these topics. Let us know in the comments what one you would like to hear more on, and we'll delve deeper on those. But Akil, anything left to say?
No, I was going to say what you said. Just so whenever you guys have topics, or if we say something in this video where you're like, we're trying to keep this in a little half-hour segment just to not overwhelm you. But if there's any ever a topic where it's like, hey, like, can we talk more about this? Shoot it in the comment section below. We do read them. This is where these subjects come from. They come from the YouTube comment section. They come from the messages we get on social media. We're trying to put this show together so that it addresses the issues that you're confused about, so that issues that you want to learn more about. So do that. And I would just say, share it with a trading buddy, right? Because the more people we can reach, the more people we can teach, the more awesome topics we can discuss. And it's just it's a win-win for everyone. So don't be selfish, Share the show.
Don't be selfish. Please share, like, subscribe. And if you're watching this live with us now, put at least one topic that you'd like to hear in the comments right now. And we'll read through those and we'll add those to the list of topics for this show. So until next week, guys, remember, doing less is doing more. And until then, have a great rest of your day. Enjoy your coffee and good luck in the markets. We'll see you then.
Thanks for joining us for the Trader Coffee Break. Be sure to like this video, subscribe to the channel if you haven't already, and don't forget to hit the notification bell to never miss a live discussion. Follow our hosts on social media. And remember, do nothing to gain perspective on everything. See you next week.